Jai Hind. A few days back, I saw a full page advertisement in a leading business newspaper. The advertisement was by a stockbroker. The advertisement said MTF at 7.99%. What is MTF? MTF stands for Margin Trade Funding. This is a loan or a funding that the broker is offering you at the rate of 8% for margin trading. What is margin trading? Margin trading is when you buy something on the stock exchange by not paying up the full amount of trade. You just pay a margin. For example, if you want to buy shares, say worth rupees 1 lakh, you can go for margin trading and put up 20,000 rupees as your margin, and the remaining 80,000 would be financed by a stockbroker. The broker will charge you an interest on it at the rate of 8%. The figures that I am quoting here are arbitrary, just for an understanding and example sake. So why do people go for short term trading and margin trade funding? If someone feels that this investment of 1 lakh would appreciate to 1 lakh 15,000 in 1 month, then he would go for short term trading. If he goes for short term trading with his own money and invests 1 lakh, it would appreciate to 1 lakh 15,000. The net profit would be 15%. But if you go for this short term trading on margin finance, margin trade finance, you can earn even a higher return. How? You take a position of 1 lakh by investing 20,000 rupees, 80,000 is financed by the broker. Now this investment appreciates to 1 lakh 15,000. At the end of 1 month, you sell it off at 1 lakh 15,000. You repay the loan of 80,000. You repay interest on this margin trade funding at the rate of 8% per annum. For a month would be around 550 rupees. So you pay off 80,000 rupees and 550 rupees. What you are left with is 35,000 rupees. So your 20,000 has grown to 35,000 rupees. So you have earned a profit of 72% in 1 month. 72% in 1 month, that's a huge return, huge return. And this huge return is what attracts people to margin trade and margin trade funding. Should you go for margin trading and margin trade finance? That's a personal decision on your risk taking ability. My personal view is and experience is short term trading, and that too a leverage trading. Leverage meaning on somebody else's money on a loan is too risky. Imagine instead of appreciating from 1 lakh to 1 lakh 15,000, had this investment depreciated to 85,000, then you would have been sitting on a huge loss, a capital loss. And believe me, recovering a capital loss in the stock market is not that easy. And worse still is the behavior of people, or should I call them speculators or investors? You can choose the term. The worst still is the behavior of the people, because when the investment depreciates and comes down to 85,000, there are not many people who have the courage to sell off that investment, to square off that investment and book a loss and come out of the market. People keep holding on to that loss making investment, waiting for a day when it would again appreciate to its original buying price, and then they would exit the market at no profit, no loss. And that rarely happens. Something ironical that I would like to share with you can avail margin trade funding at 8%, and you can also go for a home loan at 8%. Life is about choices and decisions. You have to make your own decision. You want the security of a home at 8%, or you want the insecurity of margin trading or short term trading at 8%. Make your own decision. I have made mine. I do not trade. I always invest for the long term, and my experience tells me nothing beats long term investing, nothing beats long term returns. Jai Hind.